Hello everyone, it's time for another trade breakdown, and this time I have Ger40 for you. Pretty impulsive trade with some downsides as well, as you can see from the count of structure breaks. It's pretty extended structurally, but anyways, it worked out, and I will break it down for you right now, starting from multi-time frame analysis, pointing to some main context characteristics, and yeah, we just will do a nice breakdown. So let's start with the daily, and or maybe with the weekly quickly. And on the weekly, we are having a classical uptrend, upwards moving market. A market that is creating new breaks of structures, that is creating reaccumulations here into deeper zones, and then clear movement to the upside with the ICIs. So yeah, by the way, if you saw previous Ger40 trade breakdown, I guess it was also long, and the context basically is the same. On the daily, we see basically same thing with the more detailed look. And what we did in the moment of the trade, we first of all created 8 consecutive shifts to the upside, and then of course we broke to the downside, because the more shifts to the upside you have, the more chances you have now to break to further reaccumulation. And then it started to create this fractal or internal structure and created a clear impulse to the upside. And here comes first downside of this trade, is that we have a very long and pretty rangy slash sustained bearish pullback into the zone. Yeah, it's I mean, to be honest, right now I think that we have all the chances just to break the zone and fall a little bit lower. But in the moment, what we had here is a reaction in the zone, in the extreme zone from the daily, as you can see, clear zone, and we start to show this reaction. So weekly bullish, daily bullish, 4 hours bearish, and here we have this pullback on daily that I was mentioning, pretty bearish movement. However, due to higher time frames are so clearly bullish, we can ignore this bearishness from this leg, and plus we can combine it with the fact that we are looking at here for the entry and not here. So this down push is counterbalanced with now the pullback, and the pullback is pretty clear. It is made in the form of a chain, upwards moving chain, as you can see. So we have a move, a tap into the zone, move, tap into the zone with absorption, a move, tap into the zone, a move, tap into the zone. And then we of course expect continuations in accordance with high time frame. So this is my medium time frame, because we have the same picture in 2 hours, on 1 hour, and yeah, on 2 hours, on 1 hour, and on 15 minutes. What we had here is a bit rangy market. Okay, so 15 minutes, 30 minutes, they are losing its clarity compared to medium and high time frames, but that's fine. So what we had is kind of a downtrend here. Then the market started to move back and forth. So when the market is just moving back and forth, not holding the structure, we presume accumulation, especially after this shifts to the upside and this shifts to the upside, and this possible reaccumulation here. Or we can also view it as accumulation 1, accumulation 2. One more contextual thing that adds to idea that this could be an accumulation is the fact that we are doing it in the higher time frame clear demand zone, and so we expect accumulation. And then before the trade, the latest price action was a build-up of demand here. And pay attention that this price action and this price action on 15 minutes is basically the same as this price action and this price action on 4 hours. So what I just drew on 15 minutes is this impulse and this pullback. and we have like this impulse and this pullback on 4 hours. Okay, so interesting fractal situation here. And then entry time frame was 1 minute, and the biggest problem with entry time frame here is that yes, we are clearly moving in a really beautiful uptrend here, really clear uptrend, so no doubts that this price is just moving to the upside, creating some reaccumulations on the way, then Asian session with no liquidity, and then on the start of London we have some new liquidity coming in the form of ICI, and then usual SSC here, structure S&D confirmation, and everything is moving to the upside. And the problem, of course, is this overextension. But since the price was moving really confidently, I gave it a try. And on the ICI, so basically why the entry is so high, because when you enter, for instance, here, my spread will be here, definitely. So this is the entry from this ICI. So kind of this is the entry, but because of spread, this is actually the entry. And yeah, so stop loss was really tight. Yeah, it was really tight stop loss. So what we did here is we created a new ICI. So this impulse correction, went to 11 consecutive shifts, and even more, no, 12 consecutive shifts before we went for one break to the downside. So the purpose of such breaks, usually after clear uptrends, is to create more liquidity here. More sellers here that will be manipulated, and sellers, of course, just selling all the way here because they saw this break to the downside. And what we'll see is fractal accumulation and reaccumulation, then followed, so here is this fractal accumulation followed by transitional period of clear up movement, pullback, and continuation here. Then creation of ICI, so we have this impulse correction and impulse to the upside. So this is how the trade developed. Probably here went to break even, and it just went really clearly to break even. So this is an example of pretty easy trade. I mean, easy in the terms of how it developed, because my usual trade, what it will do is just from here make one more reaccumulation, and then it can become really risky and in terms of break even. Okay, this is it. Thank you. Bye.